Your chapter 8 is about liabilities. It's kind of a review, so it's a short chapter. I would learn this definition if I were you before your test. And we will have this will be on your last unit test of chapter 8 and chapter 11. So there's a 3-pronged part to it. It's where something in the past creates an obligation. Remember, liabilities are things you owe that you have to give up something of value in the future, usually cash. Sometimes you can exchange services though on liabilities. The next slide talks about long-term versus short-term. Long-term is still 12 months or older. The next slide, I'm going through these fast because I'll have them posted. It talks about the journal entries for notes payable and calculating interest. And I will show you a problem on this shortly. But so you don't need to write all these down. And then there are 2 kind of newer topics that I wanted to cover today. Payroll taxes we have not talked about, and payroll liabilities. So on this slide, your federal income tax and state income tax comes out of your check. So when you work, the government asks your employer to go ahead and send them some of that money, right? But it's actually your money, the employee's money. So this chapter is all about liabilities. And we are in this chapter the employer. Don't think about the journal entries like you're the employee. You're the employer. So if you take money out of your employee's check, it's a liability to you, right? You told them you were going to pay them $10 an hour, and you take out $1 for federal income tax that you are going to send on to the government. That is a liability to you until you pay it to the government on their behalf. And even as an employer, once you pay it to the government, it's still the employee's money, right? Until they file their tax return and see if they owe money or if they have to get a refund. So all of these things, except for the last number 5 here, are things that are really your employee's money. Social Security and Medicare is a weird one because it is paid by the employee and the employer. So if I were to go down through this list, and I know you will have these questions, it will ask you really kind of whose money is it? So number 1, federal and state income taxes, that's the employee's money. It's paid by the employee. Social Security and Medicare, also known as FICA, is paid by the employee and the employer. Both pay that. It comes out of an employee's check and the employer matches it. Insurance premiums depend on the company, but a lot of times it's paid by both. Like the employer will pay a portion of that cost and the employee will pay another portion. Same thing with retirement contributions. That depends on the employer. And then the last one is only paid by the employer. So the first one is paid by just the employee. The second one is paid by both. The last one is paid by just the employer. And then 3 and 4 depend on what your homework says, okay? So that's kind of a new concept. I'll show you a journal entry on this. This is not a new concept, so I'm not going to stay on this slide very long. Talking about unearned revenue. When you receive money in advance, you would debit cash and credit unearned revenue. And then when we do the work. Now this one with sales tax is new because again, sales tax is money you owe to the government. If you're a business, you collect it and you pass it on to the government. But this is talking about if you were to collect a total amount from your customer, not saying that you charge them $10 for the product and then you add on sales tax. If you just charge them $12 total for the product and the sales tax, you have to back out the sales tax from that total that you've collected. So instead of it being a multiplication problem, it's actually a division problem. You will divide the total by 100 and whatever percent the sales tax is. I'll go over that too, but that is a bunch of the chapter. I know that was short. It's a short chapter. Warranties are also in this chapter, and they are similar to those adjusting entries where you would debit an expense and credit a payable. And then when you pay it off, you debit the payable and credit cash. So The only other thing I was going to do is talk a little bit about these journal entries. Exact same entries, except from the perspective of if you were the person who had borrowed the money. So I have it here. This is what the entry will look like in Chapter 8. You will debit cash and credit notes payable, whereas in Chapter 5, you debited notes receivable and credited cash. Chapter 5 had receivables and revenues. Chapter 8 has an expense and a payable. I think you have a Learn Smart due for it. Yay! That was a sweet wave. So I will post this review that we did today and this document here from Chapter 8. But if you don't have anything else to say, I will let you go, or any other questions. I love seeing your faces. So stay strong, you guys.
So have a good day.
All right. I'll see you later.
Bye. Bye.
Bye.
Bye.
Bye.
Bye.
Bye.